Good evening. It's the 10th of July today. I'm Jenny Taylor, and welcome to Blink News TV. We have some optimistic news from the Reserve Bank, suggesting that interest rate cuts might be closer than previously anticipated. The Reserve Bank of New Zealand has maintained the official cash rate at 5.5% for the 8th consecutive meeting, in line with expectations. The central bank cited a slowing economy, a cooling labor market, and gradually decreasing inflation as key factors. The Monetary Policy Committee MPC highlighted the positive impact of restrictive monetary policy in reducing consumer price inflation. We expect headline inflation to return to within the 1 to 3% target range in the latter half of this year, stated the MPC. Interestingly, the MPC has softened its language from saying the cash rate needs to stay higher for longer to it needing to stay restrictive. This change hints at a more flexible approach, with the level of restraint easing as inflation pressures decline. While this review didn't include new forecasts, earlier statements had suggested the cash rate would remain steady until mid-2025. However, upcoming inflation and labor market data will offer fresh insights for the ANZ's August statement. The market's reaction has been positive, with the dovish tone of the latest statement sparking speculation of earlier-than-expected rate cuts. This is a welcome change from May's hints at potential rate hikes. The New Zealand dollar has seen a slight dip against major currencies, and local wholesale interest rates have fallen. ASB chief economist Nick Tuffley described the latest statement as decidedly dovish, indicating that the ANZ will closely monitor economic indicators. We still expect a 25 basis point cut in November, but there's a chance for an earlier or larger cut if inflation drops more than expected, he commented. Financial markets are now anticipating a 25 basis point cut to 5.25% in October, with another likely in November. The MPC minutes pointed out the significant impact of the high cash rate, noting declines in consumer and business surveys, increased business failures, weak retail sales, and subdued bank lending. This suggests that tight monetary policy is having a stronger than expected effect on domestic demand. Despite some criticism of the ANZ's stringent stance, there is optimism about potential economic benefits. The MPC also noted that government spending cuts are slowly taking effect, while the impact of upcoming tax cuts remains uncertain. In the housing market, CoreLogic senior property economist Calvin Davidson noted that while the latest decision offers little immediate relief, there is a glimmer of hope. Any future rate drops will be welcomed by borrowers, even if they're not immediate or rapid, he said. There has already been a slight decline in rates over the past few months, and OCR cuts would certainly help. This is Jenny Taylor for Blink News TV, bringing you the latest on economic trends and their positive implications. Stay tuned for more uplifting news after the break.